Hello everybody, Jackson here from the Well Squad. Today we'll be talking about some stocks that look pretty dang cheap now and might get even cheaper, which will be a good buy for us to pick up a couple shares, right? So if you haven't been following stocks lately, the market's kind of correcting, not even that yet. It's down 5% from highs, but it's because of this new variant, whatever. Um, but yeah, we're down 5% from highs, 1.1% today, and it's like the world is flying apart. So I'm just going to look into a couple stocks that are pretty dang cheap and will get even cheaper as the time goes on, if the market keeps falling. And so these will be stocks that you could pick up now and look back in a couple months, be like, dang, I just made, 50%. So let's look into these few stocks. This is just the SPY. You can see on the 5-year chart, we're not even at the 50 moving average of the 422 mark. We are at 450, so we still got a little bit to go for a considerable bounce, right? From this mark we could see another 6%, so not too bad, but considering what we've been through, it's it's a little bit. So first off, of course, would be Visa, just because the stock is giant and it's not going away, right? We could see, let's draw some lines here. That will be a significant mark, as well as right here. So, and of course the very top, you can see Visa is not even at that 200 moving average yet. 200 moving average is at 180, so we have a little bit before then. We're currently at 190. You can see up here 190 closed. So we got $10 more to fall in Visa. It's already undervalued based on the RSI. This is the 5-year chart also, which is crazy, right? Undervalued on the RSI of the 5-year chart. It's never been like that. It touched it back in, of course, when COVID came. So on the 1 year, it's briefly touching it, but 5-year, it's undervalued based on the RSI. And we can't look at the MACD here because I have 2 moving averages up. You can only have 3 trading indicators for TradingView on the plan that I'm at. So you can see Visa is at a nice steal right now. Even under 200, I'd consider a steal. But from all-time highs of 253, we're down 25%. For this drop to happen, we need another 5% drop for it to be on the 200 moving average, and then you should be able to pick up a start position there. That'd be pretty reasonable price to get in at for Visa. Next, PayPal. I've been talking about Visa and PayPal a lot lately, just because they are solid companies with a falling stock price, and that's a great combination because you get good companies at a cheap discount, right? Visa or PayPal is no exception. You can see this huge crash from PayPal, the highs of 309 down 42% to now 180 or 179, and we still have a considerable amount to go to the 200 moving average, right? We are at 178 or so. Check again. So we can see a 15% further drop to the 200 moving average on the 5-year time frame chart. We are undervalued on the RSI considerably, right? We're at 23, Visa's straight at 30, and on the 1-year chart, of course, we are undervalued. Stock's been tanking since earnings, and even before then. So Visa, PayPal, some pretty cheap stocks right now as it is, but can get cheaper based on the 5-year time frame chart. Another one that's not as cheap, but still a solid company is Square. You can see Square is not doing too well lately. Since COVID, I went from 35 to 270, but we are now under 200, waiting for this imminent drop to the 200 moving average. That's a far drop, I will say, but nothing is too crazy in this market. So a 36% drop. Obviously, you might not be able to wait for that long. You can pick a couple shares at like 180, 150, 130. But Square's another stock to look at. Visa, PayPal are the cheapest ones, but Square's just another one in that financial sector. Then we have some e-commerce. Baba has been slammed once again. You can see it was in that 140, 150 range, and it jumped back up to 180 briefly, now back down and below that. So we're at 120 right now, which is insane because the stock went public on the US stock market at 93, right? So over that time frame since it went public, we've seen a 32% gain in that, time frame. Of course, we've seen it go to 300, and it had a low of 57, but right now the price is just 23 or so percent above the IPO price. So pretty dang cheap if you were to analyze any stock, right? And what's even crazier is the support is right at 115 and the price is at 120. So pretty dang close. Checking the 5-year chart, it's not even undervalued on the RSI, although it is briefly touching that 30 mark. On the year, we are undervalued. And yeah, Alibaba's just having a tough year all around. We see from the all-time highs of 320, we're down 60% by one of the largest Chinese companies on the New York Stock Exchange. So pretty dang bad for any Alibaba investor who invested within the last 5 years, right? You're down on your position unless you bought it in 2017, then you've only made $10, $20 a share. So a lot of people are underwater on this stock. Potentially it could be, a short squeeze, a lot of people shorting it. And then once the stock pops, everyone will have to buy up their shares and they'll jump right back, right? Could happen like that. And you could also see this is coming into play, and that's a negative, connotation where the 50 moving average crosses below the 200. So a lot of stuff to look out for. Alibaba is no exception. A falling stock, a hurting company with a very, very, very cheap price. An entry of, less than, almost a third of what it was a year ago. Consider Alibaba just to look into it more as a cheap stock to get some exposure to the Chinese market as well as stock market in general. And lastly, we have Activision Blizzard. A combination of things has taken this stock down lately, not because of the variant, but bad earnings, and the CEO pretty sure had some sexual misconduct stuff going on, so the stock's been slammed because of that as well. And looking at the chart, we can see on the 5-year chart here, we have a pretty dang solid support around 40 to 50 or 45, and some pretty heavy resistance at that 84 and 104 mark. You can see right here and right here as well as over here. And for the support, we have just like this general area as well as this and this. That's all in that 40 to 50 range. RSI already under 30 on the 5-year chart. Of course, because the stock's been slammed within the past month, right? It's gone from 80 to 56 past year. Also undervalued on the RSI. So this is more of the video game sector, but however, still part of the stock market, still part of the rise if the stock market were to jump. And this is just a cheap way to get in to a solid company with a growing fan base because they're releasing games every year, and a solid product because they have a whole bunch of games that they have their names under, and it's a cheap entry too, right? You're getting the same price you were buying in during COVID. You can't say that about too many stocks nowadays, considering the stock market has doubled since then, the general stock market, the S&P 500. So there's 5 stocks to watch out for, 4 mainly, right? Visa, PayPal, Alibaba, and Activision Blizzard. Square is kind of a one just to keep watch, not necessarily too closely just because it's not as cheap as the others, but still something to look out for. That's the video, guys. Just a couple of stocks to look out for in this market downturn. consider that we are only 5% below all-time highs. We may have a little bit more to go, to fall. So don't overinvest. Don't invest any money you're willing to lose, but just be considerate of what you buy and dollar cost average into stuff. Make starter positions. Don't jump in 100% right away. So I hope this video helps, and if it did, please drop a like and subscribe for videos every Monday, Wednesday, and Friday. Thank you guys.